Thanks, Juliana. I really appreciate the opportunity to come and speak on behalf of PartnerAlly and your company today. I know Jen and I are really excited about this. As you mentioned, I've been doing this for a very long time. I've also been doing it for over 20 years. I know what you're thinking. Very young looking guy here. How could you possibly be doing this for 20 years? I like to believe I've aged gracefully to some degree, but in all honesty, I did start doing this as the first thing in my career, is my first professional experience, and I just stuck with it. So for those of you that have been around the block a few times, you might recall September 11, 2001, 9/11 happened. It totally changed the landscape of anti-money laundering and what we know as compliance today. I had just started a financial services company, and that Patriot Act amendment to the Bank Secrecy Act kind of changed everything as we know it from an anti-money laundering perspective. So I really grew up in this space and I've seen it evolve, and we'll talk a lot about kind of how it's evolved throughout. As Juliana mentioned, I did spend some time at Apple. I've also worked in the financial services sector and in technology, so I have a bit of both. I will say that what we're going to talk about today, my experience in working with First Data Corporation and Western Union is probably the most relevant to this because in the fintech space and the crypto space, the money service business parallels when it comes to regulatory compliance are the most relevant. The way that a tech company is regulated versus the way an MSB, a payment transfer company, et cetera, is regulated are probably the most parallels. So Jen and I kind of have a unique experience in this space. We've been in kind of both areas, and so when Juliana and I talked about this initially, I was excited to support this because I know for those of you that are new to this space, for those of you that have been around for a while, you know that it's constantly evolving and it's very complex. So, Jen, over to you if you want to talk a little bit about your background.
All right, thanks, Mike. Thanks, Juliana. Hi, guys. My name is Jennifer Fessler. I too have spent a couple of decades in compliance. I started off my career actually working for MoneyGram, which was a smaller wire transfer company, and then transitioned over to Western Union. And throughout the time that I was actually at MoneyGram, I was on the phones, is how I started, and I got pulled into the compliance realm. That was back when I had to file suspicious activity reports, which was, stuff that had to be sent to FinCEN, which are some things that we'll talk about in this presentation. But I did everything from filing those reports to being a compliance analyst, so actually looking at suspicious transactions, terrorist financing. Then I pivoted into fraud. So I worked really closely with law enforcement to help them capture some of those bad, nefarious individuals who were committing consumer fraud. And then from there, I transitioned and worked for USAA. So I have a bit of tech experience, not as much as Mike, but definitely a breadth of compliance knowledge that I'm happy to share with you guys today, as much as we can in the hour that we have.
Cool. Let's go ahead and jump in and have a little bit of fun, as much fun as compliance can be, right? So, why is this important? I think that's pretty self-explanatory. You wouldn't be here, right? You all know that this is an important part of what your business looks like, what is important to the success of your business. But let's talk a little bit about our perspective on that and kind of how it lends itself to what you do. So, um, obviously, there's the regulatory component to this. For those of you that are whether you're in the startup phase or a more mature organization, there's always the threat of fines and penalties, a cease and desist, which I like to call a death sentence. That's basically shutting down your company, preventing you from having any kind of growth. That's a huge penalty and a grave possibility in this space. And then reputational damage, and that can be tied to a lot of things like investor confidence, consumer confidence, banking partner relationships, etc. So we like to talk about compliance, and going back to my time throughout the last 20 years is it touches every part of your business. So for those of you that think about compliance as a department or a function, it really is a culture. It's really not just a department. It permeates every part of your business. And it's really important that your business people, all the way through to your compliance people, truly see it that way. Because in the organizations that I've been a part of that do this well, it's part of the culture and everybody understands the importance and their part. And the companies I've been at that have struggled, they don't. see it that way. It's isolated. The business competes with the compliance department. They fight over things. And unfortunately, that usually leads to a lot of problems down the road. The other thing that I would share is that I heard this analogy probably 15, 17 years ago, and I still use it to this day. For those of you that are into Formula One or high performance race cars, one of the analogies I heard early on in my career is that compliance is like high performance brakes on a very high performing race car. So when you think about some of the most effective race cars, the fastest race cars that put up the best times in the world, they're known for having high performance brakes. And so sometimes when business people hear brakes, they hear stop, they hear impediments, they hear restriction. But in all honesty, high performing brakes allow you to navigate turns more effectively, allows you to slow down and speed back up more efficiently. And so if you think about your compliance program in that regard, it actually is a business advantage. It truly is a competitive advantage when you get this right and get it right early because it prevents you from larger hurdles in the future and it prevents you from a lot of headaches that you really do want to avoid moving forward. So definitely want to highlight those things as well. And then the other thing that we always like to tell people in this space is that having a strong compliance program when you go out and you're soliciting vendors, when you're soliciting banking partners, you're trying to get financing, having these things set up, having your ducks in a row, so to speak, is critical to getting that investor confidence, to getting that regulatory confidence, because they see that you've made that commitment, they see that you've made that investment. It's just going to make your life easier in all honesty. So while it does incur some expense, doing it right early, doing it right often is going to be the more cost-effective way in the long run. Anything, Jen, you want to add to that?
No, I think really there was something that Graham called out in the chat, which is that in their experience, they've seen it. It's toned from the top, right? And it does. It really needs to be a culture, a thing that's throughout the business. To Mike's point, where really everyone, regardless of what seat they sit in, understands that compliance is a form of risk management that ultimately will benefit your organization.
Absolutely. And that's a great phrase, tone from the top. If you're owner, your CEO, your person in charge. I mean, look at Juliana here and the investment she's making with PartnerAlly. If your most important person, most highest ranking person in your company does not believe it's important, then that is going to be a huge problem throughout your work. So you are definitely the tone setters here on this call.
Yeah, absolutely.
All right. So we wanted to highlight this oh wow number just because if you look at what fintech companies and organizations have been fined in the last calendar year, it's a huge number. Now, this number, you can find a lot of different numbers in this space. It's a reflection of anti-money laundering and some other areas. If you look at the larger number of total compliance fines, it can be in excess of 10 billion. There's a lot of numbers in this space, but just know no matter what figure you find, all these numbers make me dizzy because you think about how much money these companies are being fined for just non-compliance. This is a great figure for those of you that have a responsibility within your company to educate on why this is important. When you start talking about the amount of money that companies are paying out in fines alone, it's something that gets your business partners' attention, get your investors' attention. And you definitely want to be able to show the competitive advantage in investing this early and often because it can be a critical investment now because especially in the startup space, these fines can be catastrophic if you run into trouble here. But we definitely wanted to emphasize that being proactive or reactive is paramount, especially in this space, because as Jen and I were talking through our approach to this presentation, one of the things that became a reoccurring theme as we discussed it was you all are in this space that is uncharted territory in a lot of ways. The regulators are still trying to figure out how to properly regulate this space. And because of the innovative element of fintech and how people are inventing new payment systems, approaches, methods, all the way through like, everything, all your technology, all the different things that you've invented for your company, all the different products, services, etc. The regulators are trying to keep up with you, and so there's two issues with that. There's one, there's the the unknown, and the unknown is makes regulators uncomfortable, and uncomfortable regulators usually react in a way that is predictable. People tend to be afraid of the unknown, right? So showing that you have an investment in compliance, showing that you have an awareness and understanding of compliance is going to give them a strong feeling about where you are, and that's going to help calm their anxieties when they're learning about your business, when they do interact with you and ask questions regarding like what you're doing and how you're doing it. So it is a huge investment at times, but it is a intelligent and strategic investment, definitely. Jen, you're on mute.
Thank you. It's kind of like preventative maintenance, right? When you are, maintaining a house or a car or even your own health, it's one of those things where if you do the maintenance when it needs to be done, or even make those incremental investments at the start, it will save you in the long run from that big pain that will hit your wallet at some point if you didn't make those investments. Now, that's not to say you need to go and spend $1 trillion on a compliance program if you are just starting out. Do what makes the most sense for the size of your organization. um, and we have seen, there are certain fintechs that have grown really quickly, right? And because of that, they did have a compliance program, but it wasn't scaled to the size of their business, to the volume of the transactions, to the type of customers that they were serving. And so they got into some trouble with that, and we'll talk about that a little bit later. But yeah, it's one of those things where you invest now or you pay later. Unfortunately, compliance is not necessarily seen as a money maker, but when you think about it as an investment, it can be a money saver. So, all right, let's get into some of the requirements for compliance. We've talked a little bit about anti-money laundering. So with anti-money laundering and terrorist financing, the two of those are oftentimes kind of, in the same breath, right? And it makes sense for them to be that way. But one call out I do want to make clear, which you guys may or may not know, is that terrorist financing does not always involve money laundering. There are occasions when terrorist financing can occur through legitimate means, meaning, back when I worked at MoneyGram, there was an instance where we had a lot of nonprofit organizations where folks were sending money to the nonprofit, and then we discovered that that nonprofit was actually set up by a terrorist financing organization. So the funds themselves came from legitimate, consumers, customers, businesses, thinking that they were making a donation to a legitimate organization. And so there was no component necessarily of money laundering in that instance, but oftentimes they are said in the same breath. And the USAA Patriot Act did come out as a result, like Mike mentioned, of the terrorist attacks on 9/11. The USA Patriot Act did expand a bit of the Bank Secrecy Act, but one component that it did add explicitly was terrorist financing. So when we're talking about what these things mean, who I just noticed that this slide is not updated. That you know. We're talking about the Office of the Comptroller of Currency, FinCEN, which is Financial Crimes Enforcement Network, the Securities and Exchange Commission. Those are all U.S. regulators, but there is an international body that's called the Financial Action Task Force, and they have really set forth the standards for money laundering across the globe. So when you're looking at your laws and regulations, we're talking about a lot of US focused things, but you also need to be aware of any laws, requirements, and regulations in other countries in which you operate. So they may have more stringent requirements. For example, over in the EU, some of the consumer protection requirements are a little bit more strict than what we see in the United States. There are other countries that don't even have a requirement to have compliance programs in place. So you have that as well. There might be a gap. So just know that as we're going through this presentation, we are talking about very US centric things, but there are also state requirements and country requirements that come into play as well, which is why it's very important to have a robust compliance program. A couple of things that we wanted to call out around anti-money laundering. Willful blindness is something that can be seen when we're monitoring transactions and there might be something going on with it, or we're looking at some sort of activity. It might seem suspicious, but we let it go through anyway for whatever reason. We have a feeling on it, but we let it continue to go through. Willful blindness is actually something that folks can get in trouble for. There can be civil money penalties, among other things. So, turning a blind eye to suspicious activity or terrorist financing is definitely a big thing that the government is looking out for, and that really should be avoided. And one of the things that can help with that is having a good transaction or activity monitoring program, whether it's for customers using your services or it's businesses, right? So we need to make sure that we're reporting suspicious activity to the bodies that we need to. So within the United States, that would be FinCEN. If we operate in Canada, there's another agency that we would have to file suspicious transaction reports with. Australia, similarly. So it's again those country requirements, understanding what those things are, and making sure that we're looking out for suspicious activity and that we're reporting it when it's appropriate. Another thing to call out is high dollar transactions or high value transactions. Usually there's another level of due diligence that needs to occur around those transactions and that type of activity, because it's a high dollar, right? It's a big amount of money that's being processed through the service that you are providing. So whether it's businesses or customers who are using that and processing it, there's a really important component of knowing who that customer is, performing the due diligence when it comes to high dollar transactions that are going through your services. Um, Couple of other call outs. There are certain fintechs that do have to require as what is called, or excuse me, that must register as what is called a money service business. And you can find more information about that on FinCEN's website. If you are processing transactions, you likely have to register as an MSB with FinCEN, and by registering with the as an MSB, that's part of you maintaining your compliance under FinCEN. Let's see. One other last thing that I want to call out before I hand it back to Mike is, we talked about that huge fine that happened in 2023, right? It was $5 billion, excuse me, $8.5 billion, $5.8 billion. Crypto firms and other fintechs were fined 6 times as much last year than traditional financial institutions. And that goes back to the figure that we looked at before and kind of what the point that Mike was making, which is, you guys are so new. The regulators are trying to keep up with y'all and figure out what's going on, how they can, make sure that your services are being used appropriately and things like that. And so it just seems to me, 6 times being fined 6 times as much as a traditional financial institution really kind of lends itself to the fact that, this is an evolving market, it's an evolving industry, and they're just really, really trying to keep up with the change. Anything you want to add to that, Mike?
Just real quick, and you can transition to the next slide as I covered, is one thing I want to emphasize to the group is it can sound overwhelming when you're talking about all these different international jurisdictions and how are we possibly supposed to keep up with all the different laws and regs in all these different parts of the world. The way that most institutions handle this is that they set their compliance program in a way that strategically cares for kind of the lowest common denominator for the risk. So, if you operate in different jurisdictions where a transaction limit is, say, X, then you want to make sure that you are complying with something beneath that across the board rather than trying to adjust to every single jurisdiction because that actually creates more risk than you than what it's worth. Most of the institutions that I've supported in the past do that as a way to avoid having too many different rules that too many different people have to follow. It creates a lot of confusion. It's always going to be unique to your organization and the risk that you have, but that is a way to manage a lot of different jurisdictions without trying to keep track of every little thing. You kind of look across the board where you operate, and then you try to find kind of the sweet spot, so to speak, of where to operate. That's also going to be true for some of the things we talk about in these other areas, whether it's sanctions, KYC, et cetera. That's kind of a recurring theme. And we'll talk more about that when we get to the program section later in the presentation.
All right, great. So sanctions is another big component of a compliance program. We need to make sure that we have sanctions screening, some sort of sanctions screening, so that we can identify any specially designated nationals, politically exposed persons. There's also countries and vessels. So, for example, transactions are not allowed, or we are not, the United States cannot process transactions where individuals in Iran will receive funds or will be able to benefit from that. In 2023, Swift Prepaid Solutions was fined about $206,000 for issuing prepaid cards to folks within Iran, Syria, Cuba, and Crimea. And so it's really, really important that there is some sort of screening that goes on to identify any kind of activity that will go to one of those sanctioned countries or will go to a sanctioned individual. There's also international sanctions that are part of the process, right? Or part of the requirements. So it's not just the United States that has sanctions on different countries. In the EU, for example, they have sanctions as well, sanctions programs. So again, it's being mindful of where you're operating, the requirements of where you are operating, and making sure that you have some way to identify where the transactions or the activity is going, so that you can make sure that you put the appropriate hold on it, or you escalate it to the Office of Foreign Assets Control as required, or any the other regulatory bodies in the EU or wherever else you operate. Mike, do you want to add anything to this one before we move on?
The thing I would just highlight is just the nature of financial risk when it comes to sanctions, right? You can be fined up to $1 million per transaction when it comes to OFAC violations. Um, there's been some huge penalties, as Jen alluded to, in my time in this space. There's been some really well-known banks, HSBC, Standard Charter, etc., where they have violated sanctions laws. And this is a very evolving picture, right? The war in Ukraine, our issues in Russia, with Russia, issues in the Middle East, issues with China, North Korea, etc. Being aware of this, and there's a lot of support in this space as well. So this is one of those areas again where you don't have to try to figure all this out on your own. There's definitely some solutions, some tools, and then definitely some well respected, reputable support functions that can keep you on track of this. So, like a lot of things in the AML sanction space, there's definitely support. This isn't something you have to navigate on your
Yeah, well said. One call out, so Amazon back in 2020 actually had a violation, and they paid over $134,000 as a result of them not having a good solid sanctions screening program in place to prevent products and services from being sent to some of those countries, Crimea, Iran, and Syria. So even one of the biggest retailers or whatever they're called, Amazon, they got in trouble for not having a strong OFAC program. Alrighty, know your customer. So when we talk about know your customer, this can mean like an actual physical individual, but it can also mean a business, right? So whoever your customer base is, whether it's individuals or it's organizations, businesses, things like that, you have to perform due diligence on those individuals who are using your services. And that goes back to sanctions, right? If you're performing due diligence, you can make sure that you're identifying any businesses, individuals that might be on the OFAC list or other sanctions lists. It's also part of understanding who your customer is. Who are your customers that will be using your products? And then create a risk-based program based on that. So, for example, with MoneyGram, it was a lot of transactions that were going to South America, for example. And so we would look at, okay, we have a certain subset of individuals who are going to be sending money here. Is it suspicious activity, or is it just, individuals who are sending money back to South America to support their family? And so when you look at things like that and you understand who your customers are, you perform your due diligence, you can then take a risk-based approach when it comes to transaction monitoring, and performing any OFAC screening and things of that nature. It also helps with determining beneficial ownership. And what we mean by beneficial ownership is who is the ultimate beneficiary of the transaction, of the activity. There are times in the past where beneficial ownership wasn't always clear, and institutions and organizations have gotten in trouble with regulators for not understanding who the beneficial owner is. So, for example, I could be the ultimate beneficial owner, but something is sent to Mike. Well, you guys would actually have to perform due diligence on both Mike and myself because I'm the ultimate beneficial owner. Customer identification and verification, again, it's just making sure that we know who we're dealing with when we're allowing them to use our services. And at times it can feel a little intrusive, but ultimately it is a measure that's there to help protect your business from being misused. Anything here, Mike, that you want to call out?
Yeah, the one thing I will call out here too is in the more I've learned about the fintech space is that this is an area where the regulators are very, very focused as in beneficial ownership because, and I say this with love, the regulators are still trying to understand your guys' space, right? They're really trying to understand like the landscape of the fintech world and what it looks like and how you make money and you know, in all transparency, there has been some bad situations, some fraudulent situations, and so some of you are now paying the penalty for that, and some of these other situations that haven't been on the up and up. And so they're still trying to understand the landscape of your industry, the landscape of your business models. And so they're very focused on, okay, who's making money off of this? Who's invested in your company? Who is benefiting from your product services and beyond? Because that's a way for them to understand kind of the nature and the structure of your organization. That's kind of where they're tend to be hyper focused based on all the research and things that I've come across. So definitely want to have that disclosures ready. You definitely want to make sure that the registrations are there and it's documented. That's a huge part of protecting yourself when it comes to the regulatory authorities and audits, etc. So
Yeah, and Robinhood was actually fined $50 million for failing to timely transition from a manual transaction monitoring system that was deemed inadequate for Robinhood's size. So basically, Robinhood grew really rapidly, and as they grew, they failed to actually get some sort of transaction monitoring in place that was appropriate for the scale and the amount and volume of activity that was being conducted. So, they probably should have done some sort of automated transaction monitoring or something of that nature, but it really was just like maybe a couple individuals looking at transactions. And when they expanded so much, there was just no way for those individuals to keep up with all of that and make sure that they were identifying customers like they should, knowing their customers, performing due diligence and things like that. So yeah, $50 million is pretty big fine. They were also ordered to pay $50 million to expand their compliance program. So it's twofold, right? They had to invest 50 million in their own business, and then they ended up having to pay 50 million to the regulators. All right, Mike, consumer
okay, so let's
protection.
talk a little bit about consumer protection here. So this is the area that really exploded over the last, 10 years or so, going back to even, I guess, longer than that now. I'm dating myself, but I'm sure many of you remember the economic collapse, 2008, 2009, housing crisis, really inspired a lot of the what we know now is the consumer protection kind of era of compliance. So the construct of the CFPB, the Consumer Financial Protection Bureau, and kind of how the FTC has been involved in that. It's really put a lot of emphasis on protecting the consumer's interests. So that goes from all the way from predatory lending, all the way through just terms and conditions, disclosures, etc. In your space where this is incredibly important is making sure that people understand, what your services are, that there's transparency, that there's clarity, that they understand what they're getting, what they're not getting. So terms, conditions, disclosures, etc., are critical. UDAP, so it's mentioned here, unfair, deceptive acts and practices, or abusive acts and practices. There's actually two forms of UDAP, one having the abusive in there where they can penalize you even more if they find it to be an abusive act, is a huge part of the consumer protection landscape here in the United States. EU is big on this as well. I know a lot of you are familiar with PCI DSS just based on the nature of your business, payment card industry regulations. But long story short, I'm going to pivot to Jen here in a second. The paramount part of this is privacy right now. That's kind of the golden child of consumer protection right now. People have become more and more sensitive to their privacy. I'm sure many of you read when Facebook, what's now known as Meta, got fined several billion dollars, both in the United States as well as in the EU, for not properly disclosing what they were doing with user data. Lots of different organizations have been fined for very the similar instances. At my time in Apple, they had some data leaks, some iCloud leaks, some celebrities had some imagery leaks. You probably saw that in the news. So privacy has now become like paramount. People want to protect their privacy. They want to know how their data is being shared. So making sure that you have strong policies, procedures, disclosures, etc. in this space is going to be a huge part of protecting both yourself as well as your consumers, your customers, your partners, as well as protecting yourself with the regulatory authorities. So, we could do a whole series on privacy, right? We don't have a lot of time today, and I can talk about privacy for, a week straight because it's such a complex topic and there's a lot of laws. But definitely acclimate yourself with the jurisdictions you operate. The biggest ones are going to be, your GLBA, so Graham Lime, I always forget what it stands for, it's
Graham,
Brand Lime Bleach Act or something like that.
Lily. Yeah,
Wiley,
yeah,
whatever.
yeah.
I've taught classes on it, but I always say GLB on purpose because it's really I don't even know who that person is. I'm sure they're important. But same thing with the CCPA, California Consumer Protection Act. There's all these laws that have been enacted basically to protect your data, my data. There's even child protection acts now in a lot of states to protect child data, especially with social media, etc. So this is going to be very unique to your business model, very unique to the way that you take in data and the way that you share data. So just make sure that you have a very good relationship with your systems partners, with your marketing partners, with anything in your business that involve data sharing, because this is an area where if you make a mistake, it can be very, very expensive and very damaging, especially in the reputational. I think Meta slash Facebook would pay that money 5 times over because they have it to spend, but their reputational risk there for a while took a huge hit and it was very damaging to their business. And it made people question kind of a lot of things about using their platform, etc. So that's a social media company, very different, but the same concept when it comes to investor confidence, consumer confidence, etc. So definitely keep that in mind. I know Juliana, your expertise in privacy is even paramount to my own, but we all know how critical that is to being successful in this space and others. So won't beat this one to death, but just know that's something you definitely want to be mindful of when you're setting up your program. Jen, you want to talk a little bit about the fraud and
Yeah, so fraud, that can mean both consumer fraud or like, individuals who may be defrauded and use your services to send the money or to get the transaction or whatever it is, the activity. But there's also internal fraud, and so it's really important that you establish a program to identify any instances of internal fraud. A lot of businesses will actually lose more money to internal fraud than they incur in fines for consumer fraud. So really having a strong fraud program both for external fraud, external threats, and then your internal fraud as well is really, really important. Going down to UDAP, one thing that is pretty important that Mike kind of touched on is disclosures and messaging. So Hello Digit was actually fined $2.7 million by the Consumer Financial Protection Bureau for engaging in deceptive practices. So there was something that was on their platform where they said that its service would allow the person to save the perfect amount of money and incur no overdrafts. And so by saying the perfect amount, that was found to be misleading or deceptive by the CFPB. So be very careful with the messaging that you have on your platforms in terms of what is consumer facing, and be sure that you are aware of the requirements under the the Dodd-Frank Act, because there are a lot of disclosures and receipts and different things that need to be provided, as well as like a phone number for consumers to call to voice their complaints. There's been a lot of instances where fintechs just don't have a phone number for a customer to voice complaints, and because of that, they've gotten into some trouble. So again, just being really familiar with all of the consumer protection aspects in the jurisdictions, the countries and states in which you operate is pretty paramount.
Yeah, it's a great call out on complaints. That's definitely become a big part. You have to make sure people can go somewhere to get their issues resolved. That's very overlooked, especially even in more mature organizations. I mean, some very big financial services companies have been fined for the exact same thing. You would think they would be aware and be mindful, but they've gotten in hot water for the very same reasons. So. All right, moving on to the program. So what we're going to talk about here, and we're almost to the end, I promise. So compliance programs, when we talk about compliance programs, there is kind of the expectation universally across the board. Any jurisdiction that expects you to have a compliance program set up, these are kind of the main pillars. Some of these are the actual main pillars that are expected under the Financial Crimes Enforcement Network and the BSA, etc. There's an MSB examination manual that prescribes this, that while not necessarily directly applicable to the fintech space, I would say it's probably the most closely equivalent. It's more mature than maybe the way that fintechs are regulated currently. But here's the main program pillars, and I'll touch on each one of these at a high level. So if you don't already, within your institution, you definitely need a designated compliance officer. It doesn't have to be a lawyer. It doesn't have to be somebody that, went to law school or has all this, crazy amounts of legal compliance experience, but you do have to have somebody who understands your business, understands your risk, and is accountable to that. It is a good idea to have someone who does have that experience. However, what you can always do, and I always recommend this to private companies, if you want to find somebody that can help support your program, that can give you a very sweet discount, go into the public sector. There's a lot of regulators that are working for the government that are looking for private opportunities, and there's nothing better than having a former OCC examiner come in and help you with the program. They have the playbook, they have the background in it, and it can be extremely helpful. The institution I work at now, they've brought in several people from the public sector. Apple did the same thing. It's kind of pretty much every walk of business does this. The most controversial example is when Purdue Pharma hired the FDA guy that was doing the actual warning labels. Not always on the up and up, but when you're doing it the right way, it's great to have somebody that has the experience and the understanding of the regulations and can come in and learn your business, which is a much quicker turnaround than trying to get someone within your organization to understand everything compliance. That can be overwhelming and daunting. Policies and procedures, definitely want those commensurate with your organization, but basically this is a way to make sure everyone within your organization understands what they're responsible for and making sure that they're held accountable. Your procedures are also the way that your third-party independent review, which we'll talk about here in a second, as well as your regulators, review your program. So they go through basically what your rules are, and they first measure whether or not they feel that those rules and processes are accurate and effective, as well as they hold you accountable to what you've documented. So there's a sweet spot there. You don't want to go too far. There's no extra credit. And we always joke about that in compliance. You don't get extra credit for going too far and having too many rules and too many like internal controls and procedures, because then you're going to be held accountable to that. So if you say you're going to have Taco Tuesday every Tuesday and you miss a Tuesday, they can actually slap you on the hand for that. So you just don't want to get too prescriptive in that space. However, you definitely want to make sure that it's commensurate with your business and that you're doing what you need to do, and that everyone within your organization understands what those procedures are, so that they're following them and so that everybody's kind of on the up and up. Employee training. This is an example of that. Document. Anytime your organization attends something that helps educate them on compliance, anytime you hold a meeting where compliance is discussed, anytime you subscribe to a third-party training platform or sign up for a webinar, etc., document, save that for your records because that is all examples of employee training. It's a risk mitigation example for your program. It is an expectation of your program, and it is definitely one of the things that is supposed to be commensurate with the risk of your organization. So, what you train on, how often you train, and who you train is directly attributed to what your organization does and the risk it presents. So, definitely want to make sure that you're investing there. There's a ton of resources in that space. I know Juliana's going to talk about that here towards the end, but I definitely encourage you to take advantage of those opportunities because there's a lot of solutions in that space. Monitoring, reporting, pretty self-explanatory, but you need to make sure that you're monitoring your transactions, monitoring your customers. We talked about KYC. We talked about suspicious activity. We talked about high dollar transactions. Um, we talked about disclosures. We talked about, the fraud and privacy, etc. You just need to make sure that your program has the appropriate amount of monitoring and reporting that's expected for your products and services. We can do another full blown session on just this alone, but just make sure that you have an awareness of what you need, what's appropriate for your firm, and then whether it's a more manual process, a third party subscription, or a more sophisticated mechanism. Just make sure it's commensurate with the risk that your organization presents. That's what it's all about. It's a risk based approach. You probably heard that phrase many times. What you have in place is supposed to be commensurate with the risk that your organization presents. So just make sure that what you have in place is aligned to that. Independent review, independent audit, as it's called. Part of your program expectations is that you bring in some type of third party to evaluate your program. I think this is one of the more strategic investments you can have because it shows that someone reviewed your program and gave you feedback and that you're acting on said feedback before a regulator gets involved. So it shows that you're recognizing that you need someone to come in and evaluate the effectiveness of your program. And even in cases where maybe you don't get the best advice, it does show a proactive approach. And regulators can be very forgiving and very favorable in those situations because they understand that while you might not be experts about everything compliance, if you went out and you solicited help and you acted on the guidance that you were provided, it shows that you were being proactive, that you were investing in your program, and they're more likely to give you guidance and feedback and opportunities to self-correct than coming down on you harshly if you hadn't done anything to prevent these things from happening. So definitely highly encourage that. It's not a big investment, generally speaking. You can find people that do these independent reviews for very cost effective. It's very cost effective and it's really not too bad of a process. And then, as we mentioned before, we won't belabor this KYC, KYC, KYC. It's super important in this industry and beyond. You got to know your customer. You got to know their transaction behaviors. You got to know what's the appropriate type of transaction or behaviors within your business and know what that is and know what's abnormal. And if it is abnormal behavior, you need to be able to act upon it. So definitely a critical part of your program. And then the thing that we add in here that I always like to highlight is third-party risk management. Anytime you're doing business with a third party, whether it's a provider, a banking partner, some of you are their third party, you need to understand their program like they understand yours. So it's hugely important for your banking partners why they care, why you have compliance is because you're a risk to them and they want to make sure that you're mitigating your risk effectively. And the same thing is true for any third-party relationships you have. When you do business with somebody, it's kind of like being in a relationship. And if they have problems that you know about, they become your problems. So make sure that you're doing your third party risk management, you're doing your due diligence, and that you truly understand who you're doing business with because not managing that risk proactively can come back and bite you in the end. So definitely want to invest in making sure that you have really good due diligence with any third party providers, third party partners that you do business with. Jen, anything you want to add to that space before we jump into the philanthropy?
The only thing I wanted to add was just another fine and penalty. The reason why we wanted to provide these examples to you guys is they're real life examples. They're things that other fintechs have kind of stumbled into, and they've gotten the attention of regulators, but this one is not a FinCEN fine. This was actually a penalty that was ordered by the New York State Department of Financial Services. So this kind of goes back to the jurisdiction in which you operate, the state in which you operate. States also have their own regulatory bodies. And so the New York State Department of Financial Services actually did order Coinbase to pay $50 million because they did not have a good compliance program. Specifically, they did not have a strong know your customer slash customer due diligence program. They didn't have transaction monitoring, and they didn't have suspicious activity or reporting systems. So, and that's among other things that they failed to have. But $50 million, that's another huge fine that was imposed against a fintech for not having an appropriately scaled, sized, and staffed compliance program.
All right, home stretch, last slide, and then we'll open up for some questions and then a call to action. So I always like to end on this because I think it's a nice way to kind of tie up when you talk about compliance in a larger organization, regardless of when you're talking about the size of your organization, whether you're just starting out or you're a more mature organization with lots of staff. There's really three lines of defense when it comes to compliance programs. And your first line of defense is your business people. And when we talked about in the beginning about it being a culture of compliance, the people that need to be educated and most proactive in your compliance program are not your compliance people, it's actually your business people because they present the most amount of risk. So, quick story, when I worked at Western Union, our biggest vulnerability was the lack of care that our salespeople had when they would open up agent locations in high risk jurisdictions. They would go into high risk areas in known areas of high drug trafficking or arms trafficking or illegal pharmaceuticals, you name it. And their goal was to open up more shops, open up more agencies, and they did not care about the risk they presented to the company. So they would open up these very shady, you know, pop-up shops effectively, and it added to their numbers. They hit their quota. Everyone was happy with them in the business. However, then on the compliance side, not only did it create a huge amount of risk for the organization, it actually cost us money because then we had to turn around and shut them down not too long thereafter because illegal activity would start almost immediately. We would see it in our transaction monitoring. We'd have to shut them down. So ironically, it ended up costing Western Union a significant amount of money. And for the program to mature and for that company to start operating effectively, they really had to start holding the salespeople accountable, not just to their numbers, but who they were opening up, the quality of the relationships they were building. So when we talk about first line of defense, that is the people that grow your business, that market your business, that communicate your business, your everything that we've talked about throughout. They really do represent your brand. They represent your interests, and if they truly don't understand the risk that they can present to your organization, they can cause you a lot of problems. So that's why they're the first line of defense, because if they don't get it, then you're going to have nothing but problems down the line here. Second line of defense is your compliance program. We've talked a lot about that throughout. That is your second line. That's what we've talked about. We won't, beat that to death, but it's obviously critically important that you have your compliance program and that your compliance program is in place and that it's educating your stakeholders, your third parties, as well as your first line. Your third line of defense is what we talked about when it comes to your third party audits, your internal audit, anybody that you have within your institution or outside of your institution that helps make sure that you are having that independent review. So for more mature organizations, they have audit departments where they look at these things and actually have people that come in and look at it from kind of a third party independent, no dog in the fight type perspective. For some of them more like your startups, one of your smaller organizations, this could be somebody that you go out and contract, solicit for the opportunity. But it's a great thing to have just because it's kind of a third party, impartial, independent review. But that helps you catch things that you might not have noticed. It gives you that fresh perspective. And so this is kind of the most simplistic way. If you explain this to your business partners, your investors, your really anybody that's affiliated with your business, you have to make sure they understand where they fall in this structure. And it's a really great message for your business partners, your marketing people, your salespeople, because they need to understand that they really are your first line of defense. If they're not identifying these things proactively, if they're engaging in deals that are going to create more risk than reward, if they don't understand your risk tolerance and your risk appetite for your business, they can create a lot of problems for your organization. So it's definitely something you want to be mindful of and definitely reward the right behaviors. Definitely make sure they understand what they should be doing and acknowledge when they do the right things, because in organizations that fail, they're rewarding the wrong behaviors, like volume. Sign up more people and we'll reward you. Well, sometimes it's not a quantity thing, it's a quality thing, right? Especially when you're talking about third-party agencies, subscribers, partners, etc. If you're signing up the wrong people, you're doing business with the wrong people, it's actually going to cost you money, not make you money. And ultimately, we're all here to make sure that our companies, our business partners, our banking partners, etc., are being successful. So that's about 20 pounds of stuff in a 5-pound bag. We went through a lot of information, but what we wanted to do is make sure that we got done with some time to at least field some questions and definitely give Juliana some time to kind of wrap things up and do a call to action. So if you have any questions for us in the chat, we'll do our best to answer them now. If we can't get to them in the time that we have, we'll definitely follow up through Juliana so we can get you your questions answered. But I think what Juliana had asked is that we do it through the chat, and then Jen and I'll do our best to answer or get you an answer after the fact.
So we do have a question in the chat, Mike. And I don't know if we are legally allowed to answer this or give advice around it, but the question is, we implemented most of the compliance requirements mentioned here, but we do not have money to obtain a license. So basically, the question is this going to be allowed for them to launch their MVP as a beta version to customers if they don't have a license?
Yeah, so legally we can't advise you on that, and Jen's right. That would be great both exposure for us as well as for you on that front. What I advise you to do is to consult with a partner, like a partner in this space. I know Juliana, that's part of the network here, is to talk to your peers that are in the same space so that you're not getting advised by someone like myself or Jen, but more so somebody that's in the same space that's navigating the same waters. There's probably somebody on this call right now that can help you answer that question without, having to be deposed later for potentially getting you in trouble. So I'm trying to keep my freedom. I like my freedom. So. I have kids. Great question, though. That's a very common question, and I genuinely understand where it's coming from.
Thank you so much, Mike and Jen. It looks like, oh, actually, there's one more question.
Okay, let's see. So here's the question, Mike. What is the typical challenge of internal communication of this risk initiative to marketing and brand as part of the company in order to get budget approval from the top?
That's a great question. I think it goes back to what we talked about in the beginning, is truly getting them to understand why the investment's so important and why it benefits them. Um, that's part of the reason that we wanted to give you some of those stories about what's happened in the industry and some of the fines that have been levied. It's important for them to understand the financial risk that is involved in these decisions. And I think that when they see and they understand and they have industry comps of people and organizations that have been either civilly penalized or organizationally penalized, it does help grease the wheels a little bit to get you support in that space. So I definitely encourage you to do that, as well as really emphasize the part about being proactive over reactive. I think your your regulatory relationships, your banking partner relationships will be much improved if they believe that you've invested in this and that you have your ducks in a row, so to speak. So that's a good place to start. And then from there, it's really as they start to see your program mature and they see the benefits, sometimes it starts to like kind of self-feed it. It's like they start to see the benefit, they start to see the improvement, and then they realize the investment was a good one, and then it becomes a lot easier to not be seen as a cost center, but more so as strategic investment.
Mm. Okay, we have another question. Sorry, Juliana, I know you need to kind of wrap us up, but real quick, Mike, and I don't know if you have anyone top of mind for this. Can you recommend a fractional compliance firm that we could hire to obtain and supporting MSB and MTL licenses?
That's probably something we could take offline. But yeah, there's definitely some partners there, and I know Juliana is kind of connected in that space as well. So that's probably a good transition to some of the things that she wants to talk about. But yeah, that's part of what we wanted to bring people together for. Is there's a lot of opportunity here to definitely get you the support you need to align to some of these partners you want to find to get set up.
Yeah, thank you, Mike. All right, so let's wrap this up and summarize our discussion. Lots of good points. Thank you, Jen and Mike. And as we all know, securing trust in the fintech space is super important, and the impact of having financial misconduct could be huge. Money laundering, as we talked about it, is already a global challenge. It costs between 2 to 5% of the world's GDP annually. Criminals, on average, launder between 800 million to 2 trillion each year. And as Mike and Jen mentioned earlier, the fines could be brutal for money laundering non-compliance. But this also impacts consumers as well. And on average, consumers lose around $10 billion a year to fraud. On top of that, companies lose money as well. The average loss of revenue is 1.7% for companies due to fraud, but it also affects their not just bottom line, but reputation as well. And it's not that companies don't do enough, right? There are lots of efforts that companies within the fintech space and financial institutions put towards being compliant and staying compliant. And it's a really interesting number because just last year alone, companies spent over $206 billion on staying compliant. This is a huge number, right? So what PartnerAlly can do to help? Because not every company has money, right, to build a compliance program, and we have questions related to that in the chat as well. And as you can see, PartnerAlly is very passionate about the topic, and we really want to help, and we want to build a community who would actually be focused on solving this challenge. And that's why we decided to introduce the League. And this is that community that we want to build that will provide you an opportunity to learn from the experts, such as Mike and Jan. Also, you would be able to participate in the future events. And we will build courses to help you better understand the fintech compliance, and you'll be able to enroll into those courses through our platform. And you'll be able to collaborate, network, and forge partnerships as well. And the League will be we'll be able to join the League based on invitation and become the core team to shape that learning path for you and for others. Even though in the beginning it will be by invitation only, we will in the future open up this to other companies as well. If they want to join, they'll be able to apply and go through our verification process before they join the League. We want to keep this as a tight community so they stay focused on our mission. And once you do get invitation, you'll be able to confirm your invitation, set up your profile within the League. You'll be able to find the materials presented during this event or future events. You'll be able also to enroll and subscribe for our future events. We already have some ideas. We had folks asking about SOC 2 guidelines, security best practices, and so on. So we have some future events coming up. You'll be also able to enroll into our courses, and this is where we will partner with Mike and Jen to build our first courses on fintech compliance. We will also have a special offer for you. So in case you are a compliance expert or provide solutions within the fintech space, you'll be able to set up your own profile and showcase your company innovations. And more than that, you'll be able to network, partner with others, and forge those meaningful connections within our platform as well. So PartnerAlly, actually, the entire platform and the league is powered by PartnerAlly. And it's not there just yet, but it is coming soon in March. So stay tuned. Meanwhile, we really want to hear from you. Please tell us how we have done in terms of hosting this event. If you have some ideas for future events and topics that you would like to know about. So we will send a survey to you right after this event. So please respond. And thank you so much for joining us today. Hopefully you enjoy the event.
Thank you so much for your time.
Thank you, everyone.
Thank you.
Take care.
Thank you, guys. It was a pleasure.
Thank you very much.
Super. Stay tuned. Talk to you soon. Bye.